All right. Looking at the ES on Monday, June 12th. Seeing what we might end up doing over the weekend, put in this trend line. Just kind of like the way it looks right now and how we're tightening up on top of it. So, not that I expect an extreme pullback, but it would not surprise me now if we do start getting one. I think price might pop up one last time. Equal highs right here. That's a really good straight line. So equal highs between these two wicks right here. So if we happen to pop up one more time, then I think we do it along this line and we start breaking down from there. This sell side could be in play. We have some other stuff that we're going to be looking at as I go into some lower time frames, but we do have a nice sell side liquidity right in here that we never really touched on this one. I know it looks like we have, but we actually have not touched that. Did not break through that sell side. And I think that's kind of where our eyes might be. This is a big news week, so none of the technical analysis this week might actually matter. We've got nice equal highs here that have become structure. Hence the reason for the dotted line instead of the solid line. If news continues to kind of be dollar strong, then we could probably see a decent little pullback into that structure, which means we would have broken this area, and we might find that we end up getting into a little bit of consolidation to the downside, even. So if we are to get down into here, then we may just kind of creep a little bit before working our way back up later on in the month of July. We all know that July into August ends up being somewhat of a slow period. So at the end of this month, we could get a slower period. And depending on, the way the kind of economic news comes out would, I think, really determine which direction this market continues. Right now, we're super bullish. So it's going to be kind of hard to not be a part of the movement to the upside. But at some point, there has to be some type of pullback. I say that there doesn't, but you would expect some type of pullback. And I do believe with the liquidity that's lying below some of this movement over the last couple of months, I do believe that we're going to get some kind of pullback into here, taking up some of that liquidity in that pool. Let's drop down to an hour on the ES. Get a closer look at this. So this is we're going to get into this red line here in just a second. This mean threshold is what it is. It's not a consequent encroachment. It's mean threshold. I know it looks like consequent encroachment right now, but we'll get into it in just a second. Again, here's that sell side liquidity. We've got nice equal lows right in here, and if we zoom in a little bit tighter, you can see this wick did not come down and touch it, so it is still exposed. We do have liquidity forming right in here. Love these two little bounces right there that we're trying to dig back into. So again, the hourly does not change my thoughts from what I was thinking on the 4 hour. I do believe if we are to even go a little bit higher, that the plan is to break through this trend line and head towards this sell side liquidity. Do we get it all today? I don't know. Probably not. It's not a big news driver today at all. This could also be considered some type of sell side. So we will continue to look at what those wicks are look like on a lower time frames. Going to the 15-minute, you can see the 1 hour, not much different. All right, 15-minute chart. We're starting to see a leveling out of this. So you look down in here, the 15-minute chart clearly looks pretty bullish. We got up into here. Even if we go to the left here, you can see that this comes from a lower area. So this is pretty bullish. But if you look at just this area here, it's still within this larger range. So because we're in this larger range, what I'm going to end up doing is taking the lower wick of that. I'm going to create a sell side liquidity line. And then I'm going to come up here and I'm going to create a buy side liquidity line. For reference, and I do like that range. Again, we're in the upper premium portion of this range. We have had some stagnant Asian session across Sunday evening, and then popped up during early over midnight, and then into the London session, sold off late London session. Now we're still within this upper portion of this range, so kind of tells me a lot. All right, and to go back to this red line that I said we'd get to, this is a 15-minute order block right here, mean threshold. I love that mean threshold. We come down and almost touched it, but didn't, and then bounced right from it before we made this larger move to the upside. So what I'm going to end up doing is I'm going to stretch this further out in time. I'm going to get an idea of where this is at. It's roughly at 54.50. I'm going to stretch this out in the time. Drop it back down to 54.50. That should still be pretty straight. And this is, another area. If we continue to fall off, this could be an area in which we struggle. So again, if over the course of this week we get some pretty big news candles that tell us we're going to end up kind of trickling down, these are these three areas that I have in mind for this week. Now, tomorrow when CPI comes out, we could get below here, and then CPI comes out and immediately takes out all three. If that's the case, then I think we trickle back up the rest of the week. But again, we've got FOMC meeting minutes on Wednesday. We've got just so many other things that are going to factor into this week's price action. Today is really the only day in which there's not a whole lot going on at all today. We got the 10-year bond auction at 1 o'clock. Up until then, we don't have any news. And then tomorrow, we have CPI. Wednesday, we have PPI, FOMC projection minutes. Let me just go ahead and bring this over. This is from Forex Factory. CPI, PPI, FOMC statement, funds rate, press conference. And then Aussie has some employment change and exchange unemployment rate that could affect, Forex traders of the Aussie dollar. Euro monetary policy statement that will affect the dollar, which could affect the markets. Thursday is going to be the unemployment change, retail sales, manufacturing, all that kind of stuff. And then also we have the ECB press conference after their monetary policy statement. And then Japan, that later on that evening. It's tentative right now. They tend to just kind of surprise it on you. So monetary policy statement Thursday night, policy rate press conference led to follow. And then Friday, we got Waller speaking, and then consumer sentiment, inflation expectations. And I think this is going to be an important Friday too. Because I was reading an article this morning that just came out a little while ago about how the Fed backs away from wages focus, because that's been one of the drivers of them raising the rate hikes, raising the rates, because they felt like wages were getting so high, and that's what was kind of driving inflation. But now they're not. They're kind of backing away from that, and they're thinking that it doesn't have such a direct connection between wages and inflation. And if that's the case, they might end up skipping a rate hike at some point. Maybe not this one, but maybe the next one. Never know. Or not necessarily yet. Not necessarily stopping the hikes, but maybe putting a pause on them, right? Maybe this time they don't do the hike, and then the next time they do another quarter. So that was a pretty good article read. It was from Bloomberg News. So it's on the Forex Factory. So this is the article that I was reading. It's a good article. But so all in all, it's not that I'm bearish. It's that I think there's a higher potential for price action to drop. A few different reasons. Again, we are definitely in the premium of the smaller range. We're definitely in the premium of this huge move from way back when. So overall, in the higher time frames, I do expect pullbacks. Now, if for some reason we do get down into here, there's no reason to think that we can't turn back around and then save the rest for news or something. So always keeping an open mind on what price may do. I'm going to let the market show me, and I'm not going to just, impose my will, because if I feel like the market has to drop and I start applying short positions here, then I could just get crushed. So I'm going to wait for my setups. All right, let's look at the NQ. I have all these new contracts for September in the waiting. So I haven't actually rolled yet, but I'm pretty close to it. All right, the NQ should drop out to the 4-hour. Zoom out to the 4-hour. If you can see, this is the monthly line. Pretty good equal lows down here. I'm gonna go ahead and put a nice little line on it. Call that sell side. Pretty good straight line right there. And then just because, here's your buy side. And we do have that range. So right in there, that's a pretty good little range. Pretty clean little area right here. And we're obviously in the premium of it, north side of it. So, obviously I look for shorts up in here. Not saying that I don't take buys up in here, but that on the higher time frame, I do believe we're going to get a pullback. So let's drop into the hourly. Less of a trend line on the NASDAQ compared to the ES, right? So these two are not equal lows on the ES. This one is way higher. And then we have this actually above here, but not above here type of thing. So we do have kind of a straight line in between here. I mean, I guess I can manufacture that if I wanted to, but it's just not as clean as what it looks like on the ES. So we do have probably a good mean threshold within this area, but I'm not going to draw it because honestly, this Monday median line, where it currently sits right now, is at a pretty good area. So I'm not going to actually draw that red line in on the mean threshold. It's right here at the top of that structure as well, which is where price is kind of situated and hanging out, which is showing some bullish signs, some rejection of this spot to continue higher, and that could easily be the case. Move into a 15-minute chart. Do you have a decent little range that we're working in from Friday last week? I could go ahead and put a line right here. I don't think I'm really married to this line by any means, but I'm not gonna put this line on because this one's so close to it. So, nice little bounce off the median there, which is again coincides with all the structure right there that we've just put in, which is also, these two candlesticks right here catch my eye. I kind of like that formation. You can do a mean threshold on it. Let's see what it does here at the top of it. As you can see, we had a decent little line in which price did kind of work its way back down, but not displacing back down. It wasn't like a strong move. So right now, just waiting for some type of action to show me what the market wants to do. And right now the market's not showing me anything. So on the higher time frames, we were just in this range, and that's all there is to it. So not much to really go on when it comes to NQ. I trade the ES, not necessarily exclusively, but I do trade the ES way more than I do the NQ or the Dow or the YM. So, but I do like to look at both markets, just kind of get an idea. And right now they look fairly similar. So, all right, let's go into the dollar. See what the dollar's got. What it's been doing. Just move it out to a 4-hour chart. You can start on the daily. You can do the weekly if you want to. Normally, the 4-hour chart gives me enough structure to really go off of, and I'm perfectly fine with that. So I don't have to have. I don't usually go to the daily or the weekly unless I just want to see where those things finish off at. So the dollar obviously been pretty weak lately, strong and weak at the same time. So these moves are just kind of grinding moves up. But look at the huge red candles, right? So the big red candles just tell me that the downside movement is stronger and easier to get, obviously, than the upside movement. So higher resistance moving back to the upside, lower resistance to the downside. So which starts to create that type of trend, right? So we have broken below this low. We do have some lows here. I like this structure down here. I'll zoom out just a little bit so we can see that better. There you go. Like that structure. This could be a point in which we eventually get to. And if the dollar remains weak, then that's another reason why the markets could be continuing to go up. There is a correlation between the two. It's kind of like an inverted correlation, but usually when the dollar is up, the markets are down. If the dollar is down, the markets are up. They're not always perfectly in sync, but there are times in which you can use both markets to play off of each other. You could put sell side right here. I do like that as sell side. And in fact, I am going to put a line on that because we have broken down through that structure and sell side. And I'm going to make this that. And what I'm going to do here is I'm going to delete it, but I'm going to put that line right there. You know what? Not yet. I'm not going to make that structure yet. We get down into here, and then I may draw this out as structure, like this dotted line here, like I've done here, and see. I do believe we are still in kind of a bearish market. That's not to say that this could be strong. Again, this is a big news week. There is not a news driver today, so we could see some further sell off of the dollar today. But this week, depending on news, really is going to determine what this market is going to look like over the next couple of months. Well, over the next at least month. So it's still due for a little bit more of a pullback. We have taken out a whole bunch up in here. The draw on buy side is, still up here, but we still got a pretty ways to go. So I think some further downside on the dollar, which would constitute some upside here. And again, it's downside overall in the higher time frames. Let's drop into an hourly and see what we got. So there's a good straight line in which we've come down and grabbed all of that liquidity, got below it, and we made a good little bounce. Yeah, I think we're going to have to get above the daily where we opened at to see if we're going to continue. We do have nice structure right here. Look where we bounced at. That structure right there, even though we pierced through it, we did not close above it, and then we immediately sold off, took away all that liquidity. We do have a nice mean threshold of this breaker. I'm going to stretch that out right there, because that could be a good area in which this price could come and seek, slow down, turn around. So yeah, this right here on the hourly as opposed to the 4 hour, just this picture right here, yes, we are, in kind of a downtrend, but we've taken out nice liquidity on the way down here, and this is a good place for a nice pullback. Now, does that mean that I'm saying we're going to work our way all the way back up? No, not at all. But in this initial area, we could easily see price move up most of the day for the dollar, which would be bearish for the market, or at least give me bearish sentiment for the markets, which is what I'm already thinking. So that's another reason why I'm also looking for the dollar to be a little bullish today. Let's drop into a 15-minute. Love that pattern. And I love that. That just further tells me that this is going to continue. This pattern right here, it's kind of like that turtle soup pattern. Nice little consolidation right there. And then we dropped into some stops, which probably coincided with that liquidity being taken to the left. Let me make this a little bit bigger so we can talk about it. So yeah, Let me get the low here. Is this the low? No, this is the low. All right. So just say we had a line here and that was sell side liquidity. As you can see, price came down to it, perfectly tapped it, but we consolidated, right? And then we dipped further down, taking out all that stop, all those stops in liquidity, and then immediately rejected straight back up. Structure. So this was definitely an indication that the dollar could be bullish. Now, how long it's going to be bullish, I don't know, but I do honestly, coming off of one of these little turtle soup patterns, I do believe we're going to take out these highs, especially here. So this is going to be first place that I'd be looking, and then the second place is going to be the Monday high. I'm not going to draw a line on it, but if we start taking out these highs, then yeah, we're going to come all the way up here to this mean threshold, possibly a little bit higher. See what the day holds. I'm going to go into this pattern just a little bit further. As you can see, price is just dumping on the 5-minute chart. We get down the sell side, we kind of reject. This is super important. This right here is just really important. This area. Some people call it bear flag. To me, it's just consolidation. We are just accumulating buys and sells. And then what does it do? People are getting into the buy. We start drawing straight lines. If you go into a lower time frame, this looks like the same as what this looks like. Zoom in just a little bit right here. Right, we get down. I mean, this right here is very important. The fact that we tapped into that sell side, went just below it, as you can see, just below it, created this little bit of consolidation. We took out that liquidity there and consolidated again. Then we dropped all the way into this liquidity pool situated below all that sell side liquidity. And then what did we do when we got down here? Immediately rejected it. Now, yeah, I know we got 3 candles right behind it that took out all of that, but that's just inefficiency. That's market just closing up all of those inefficient open orders that it had to fulfill when whenever all these sellers or big numbers of sellers were getting out, right? And that's what was causing this jump. This was the area in which everybody was unloading positions. And then guess what? We go into a period of consolidation because what's happening? We're loading positions. We're jumping back on board. It looks a little bit like this. But in this case, we've already taken out liquidity. So we're loading back up and then bam, push through structure, fair value gap, at structure break, trade. That pattern happens over and over in a lot of places on a lot of different instruments. And if you focus on just this pattern right here, you make a lot of money. All right. So I think that's kind of going to be my idea for today. I'm going to go ahead and call it right here, and I will see you in the next one.